we got to get going.
Okay.
Fortunately, the debt
Can't
ceiling
hear anything.
crisis is over and we can get into June, right? But we do have that Fed day coming up here in the middle of the month just to spice things up a little bit. So let's find out what these pros think about all these things going on, and particularly how they're going to approach June. We've got Fausto Pugliese with us. Welcome back, Fausto. We're so glad you're here.
Good to be back.
Good. We got Jack Carter that hopefully will join us here with sound, and of course, Uncle Roger and Geof Smith. So let's get going. I want to know from you guys. Let's get started with you first, Fausto. What did you notice, if anything, in May that's like really getting you ready for June? I know you do a lot of this intraday trading. You do this, you see this iceberg kind of thing. Is there anything that you noticed in May that's, kind of getting you ready for June?
Listen, I always kind of listen to these analysts on TV. I wake up in the morning, before I get started my trades. I mean, I'm with my traders at like 7:45 in the morning, 8 o'clock. We do a lot of pre-market. And they all said the same thing. They were bashing Facebook. They were bashing the video. They were bashing like all these high tech. And you know what? They didn't go down. I mean, they actually did the totally opposite what's going on. So the market right now is what? We're up about 600 points right now on the Dow, the S&P up about 55. So there's obviously a little bit of a rally going on. We broke through a big resistance. So like, you know what's great about what we do as day traders is that, by seeing what's happening over the course of the day, we'll trickle into a swing trade, into an investment, and into an option trade. And that's what I'm really kind of seeing. And like, I'm seeing like a lot of these like stocks that were very expensive that also got very crushed. I know Jeffy was bringing it up yesterday. Terminer is like, what are you guys looking at? And I said, my God, like UCAR yesterday. And there was another one this morning. What was the other one at MMV? I mean, this stock literally went from like, I don't know, $1 to $4. I mean, there's some really good stocks out there that really got beat up coming back. But going into this summer, I mean, I'm pretty excited.
Yeah. Oh, I want to hear more about that excitement. We got to hear why you're excited. Let me move over to you, Roger. What are you thinking, about June after you've gone through May? What kind of things, what do you, anything that's shifting that you've seen in sectors, broad markets, what?
Yeah, I think, and thanks, Celeste, for having me here. I appreciate it. I haven't been here for a few weeks.
Yeah.
I genuinely believe the market is going to soften up. I think a lot of what we've seen is going to be reversed. I think we're going to see some downside in technology stocks and the 5 or 6 stocks that have been driving this market. And I think we're going to see some upside in healthcare, consumer staples, and basically all the stocks that got their air sucked out of them by those 6 tech stocks. So I think a lot of the blue chips, what I think is going to happen is the Dow is going to get stronger at the expense of the NASDAQ, which has been the opposite of what we've been seeing.
Yeah, for sure. Let's see. Jack Carter, have you been able to join us? Okay, I don't see Jack, so we'll just keep going. Geof Smith, how about you? We love your commodity mindset. It helps give us the right kind of focus and a big picture of what's going on. Is there anything that had your attention in May, maybe a certain commodity or anything? How did you look at May? How are you looking at June with that perspective?
Well, we're coming into a harvest of wheat right now. So we usually, you've heard of the harvest lows. So it's probably going to be a little weaker going over into probably July. And then probably start to kind of ricochet. That usually drags down corn and soybeans at the same time. You look at I always just start looking at, how the plantings are going and how, the little sprouts are coming up and, the rain and what's been going on everywhere. This is a very critical time of year, especially for soybeans, corn, even cotton. And so I've been kind of anxiously waiting. We just had a crop progress report come out, on Tuesday that I kind of peeled through a little bit. We've got World Ag Supply coming out next week. So that'll give us a little better feel for not only what we're doing here, but what's happening around globally, especially since we're coming into kind of our harvest here. We're going into plantings and stuff like that down in Brazil and things like that. So I want to kind of see what's going on over there and kind of see what the crops are doing over in Australia and I'd actually, say, and Ukraine, but yeah. I mean, who knows if anything's coming out of there or not anymore. Sometimes they say they are, sometimes they say they're not. So I just kind of wrote them off. Yeah. Which is going to really hurt, global supplies if that's going to be the case. But we'll keep our ear to the ground on that.
Yeah, it just becomes so commonplace. It's just part of our everyday, what's going on in Ukraine. So thanks for that reminder. Oh, Jack Carter, you have joined us. Can you hear us?
Yes, I can. Thank you.
Hey there. Hey, Jack. How are you?
Hey, Roger, how you doing? Hey, Fausto, how's
Hey,
that
good.
sauce, baby?
I
Baby's
just tell
got
him
the
I just came out
sauce.
with a new video. You got to watch it.
I know. I can't wait. I want you to serve it to me on a bowl of hot noodles, right?
Ooh,
No, there's noodles. That's not a real word. It's
Spaghetti. then.
Spaghetti.
Okay.
You
I'm
know?
Irish. My wife's Italian. I don't know what to tell you.
oh, that's great. That's great. Hey, Jack, we were just talking really kind of about, what things that you saw in May, how that's transitioning into June, impacting what your view is on June. How would you answer that question?
May was a shocker. One of the best months I've had in over a year. Really, really, really surprised at kind of the disconnect, which I'll show you in a few minutes, between NASDAQ and the other two major indexes. But this was very narrow and very deep. I think it was just like 5 or 6 stocks that were really giving up all the action. And even then, I was just could not believe AVGO had like $100 swing in one day. It opened really strong, over 900, and then faded back. And I'm just seeing a lot of these short-term options. Like today, we'll see just tons of 0 days to expiration options on tech stocks, where these orders to buy calls come in the morning in that first 12 to 17 minutes, and then it's just crazy. Today will be the same thing.
Yeah.
So yeah, I'm seeing wild swings, just a few stocks kind of leading the pack. Tech, thankfully, I love tech, NVIDIA, AVGO, all that stuff, and a little bit of CMG. But overall, the markets are not that healthy. When you look at the news, you see stuff screaming, but the Dow is, as I look at it, is bearish, and S&P 500 is barely hanging on. So all this could head south in June. It wouldn't surprise me a bit.
That's well said. Well, let's keep it going. Let's come back to you, Fausto. Got to find out, what are you so excited about coming into these summer months? I mean, when we think, sell May and go away, or, doldrums of the summer, what are you so excited about? And I know you were talking about that UCAR. I mean, what a stock. That was fantastic. So what's got you excited?
Did you look it up? I mean, that
I
thing
sure
literally-
did. I loved it.
It was
Chinese
at like
stock.
290. Oh, it was unbelievable. Yesterday it was at 290. The thing just ran all the way to $11. And then today it went all the way to 15. Starting to back off. I wouldn't trade it anymore. I mean, that was yesterday's news. But what's nice, I'm seeing a lot of these inexpensive stocks that got really beat up with a lot of these short squeezes. I mean, I'm seeing a lot more short squeezes, and I'm also seeing a lot more stocks getting halted. Sometimes these stocks move up so fast, they hold them for 5 minutes. And and I'm always out there telling everybody, hey, you got a big runner up. So I'm feeling like this summer is going to be a lot different than most summers. Summer's usually slow. People start going away when you get to August and so on. But I'm finding more and more a lot more volatility that's been happening more and more. I mean, like I was just down in NASDAQ. Last week, and talking about the NASDAQ book viewer, and they're saying like their volume is up almost by 50. They're controlling about almost 50% of the volume just in all the stocks in general. They're seeing a big rush in volume in the exchanges. So I'm actually quite excited. I think there's a lot of great opportunities. So I think this summer is going to be probably a lot more volatile than past ones.
Hey, Fausto, I got to ask you, guys got killed shorting NVIDIA. Did they talk about that at all?
They didn't really talk about it. I mean, what's happening is that NVIDIA is trickling into a lot of the other AI stocks. I mean, you saw what happened with AI in general. XAI was another one. And not only that, but what's also we're finding a lot of is that a lot of the drug stocks are taking off too. I mean, you've probably heard about Ozempic and all of those stocks, the diabetes drugs. I mean, a lot of them are starting to pick up, like NOV, that owns it. There's just a lot of these things I'm just seeing that are really starting to pick up some big momentum. But not too many people got really hurt with NVIDIA. I heard more people went long than short.
I just probably, but the guys I read that went short, they may be some of them permanently out now. I mean, that's insane to short a stock like that with the unknowns. There's so many better shorts that are already going down, rather than to pick something like that and have your face ripped off and put yourself out of business.
The video,
I don't-
well, the video, I mean, if you really look at what it basically has done in the past year, I mean, almost double.
This year, I know,
I mean,
it's
it's just,
crazy.
you know, I mean, it was down to $100. You could have
Tell
bought
me,
it.
still long. Yeah.
They have a contract with the government where they're prohibited they're prohibited in disclosing what they are doing for the U.S. government to China specifically in their contract, which I think is pretty cool.
Yeah. You know, and like Celeste was talking about before, we were talking about Eli Lilly, leadership and management, you know,
Yeah.
and NVIDIA, they got all the kind of management in the world. That guy is really top dog.
They're
A lot
ahead of
big
the curve.
differences. Mhm. Hey, Fausto, I got a question for you too. When you're talking about that volatility, you know, that you think will occur in the summertime, do you think that there's going to be plenty of opportunity to the upside and the downside? Do you think it's a little skewed one way or the other? Does it matter to you? How do you look at that?
You know, I'll give you a good example. A couple of friends of mine own real estate, and New York, they're saying is going to get killed because of, you know, their homes are actually doing well, but like businesses or, you know, just commercial real estate, everybody's working from home. So I'm like, is it time to buy? Whatever it is. Like, listen, there's always an opportunity to buy. Okay, always. So it's like the stock market for us. No matter what the volatility is, if people think it's going to go down or long, it doesn't affect us because we're day trading. So we're just there are 25,000 stocks out there that trade every day. So, but we're trading the top 5 that are moving in the market. So there's always going to be opportunities out there. But I just feel like I'm seeing more and more stocks that are just getting just more volatile. And the only thing I'm concerned about, which I think that, you know, Roger brought up a little bit, it's like these things are starting to get a little expensive. I mean, they are getting a little bit. I mean, you look what I heard people like bashing Facebook. I mean, Facebook had a big run. Amazon, these things are starting to double. Apple, I mean, they're up a lot. So those might take off a little bit, but some of the low cap stocks that we trade, some more less expensive, they've just been on fire.
Yeah. So talk a little bit about your schedule, Fausto, because I mean, I know before we started, you're talking about all the different things that you like to do, you know, family recipes, that sort of thing. And, you know, summer's coming up, all the barbecues. I mean, are you glued to a computer? What's your schedule like coming into this summer? How do you anticipate you're going to do that?
I think everybody here is pretty much has the same schedule as me. I mean, us as traders, like when we get to our age, I mean, I'm working this as a full-time job. So we really pretty much just bang out. We have to bang out in the morning. A lot of the action happens early in the morning or late in the afternoon, but depending on where you logged in from, you could do it in the middle of the day, whatever, but this is not a full-time job. The key of everything is surrounding yourself with good traders, you know, like, you know, some of you know, regarding with Jeff and with, you know, and Tom Busby, you know, they have these trading rooms. As long as you surround yourself with good traders and you learn from good traders, and the most important thing is not to learn how to make money, but learning how to stop losing it. That will make you succeed and, you know, and perspire, you know, do well moving forward over the years. But that's really what the real schedule is. Do things that you enjoy. You don't want to make this very stressful. A lot of people make it stressful. You can't trade a lot, but you have to trade. But just make a few trades. And if you don't trade, come back tomorrow. Listen, it's like fishing. You know, you might not get your 800-pound tuna, but eventually you'll get it. As long as you keep doing it, as long as you love doing it, you know, and that's really what the schedule it is.
Perfect. Well, and speaking of, you know, finding opportunities, that sort of thing, what's the best way for people to find opportunities like UCAR and the other one you mentioned in WV, I think it was?
Well, I mean, let me just show my screen really quick so you guys can see what we got going on here. So basically you could see here's in the video, but let's look at the stock, you know, MMV. MMV this morning, you could see it right here, started around 8 o'clock this morning, and it had a big run around 8:45. Thing was already at $1, ran already to 250. Market was not even open, Celeste. And then once the market opened up, you could see it ran from 230 all the way to $4. That's another dollar move. That's a 20% move, even if you missed it in pre-market, you know, and obviously it went down and a lot of people looking at it, well, why is it going down? And, you know, I'm a very big believer in, and I know Jack knows this very well. I just follow the orders. I mean, if you look over here and follow these orders, you could see here that iceberg orders started showing up right here. You can see all these little red lines. Those are big orders that showed up. These are algorithms, dark pools, you know, all that. So we kind of just follow the orders of these trades and just basically follow the money. So as long as you buy within that range where all those orders are, that pretty much does it. Here's UCAR, by the way. I haven't shown you. This thing was just I mean, we're talking about it, but visual people like don't really get it until they see it. But this was UCAR. Where they put? Oh, there it is, right there. This is UCAR from yesterday. So if you see this thing from yesterday, this thing was just unbelievable. It started right around. It had a good move early in the morning, and then right around 10 o'clock, it did this breakout. Huge orders came in. $5 ran to about 9. Then it did something on 12, and you could see, look at it, went all the way to 15. These are the things that we kind of focus on as a trader. And just the last but not least, just put it right here to show you what's going on. Now it's trending down. You can see orders out there. Orders are getting filled. So now it's more in a downtrend. So you can see how the orders are getting filled. So to me, it's more of a short squeeze. The whole idea is just not getting squeezed.
Yeah, I love that. Love that. And just a reminder to everybody too, Fausto actually teaches the people at NASDAQ how to use some of their tools. And that was some of the things that you were just showing us were the tools that are available at the NASDAQ.
Yeah, this is actually, if anybody wants it, this is actually the NASDAQ book viewer, if anybody wants to see it. This thing pushes $15. I mean, Jack knows it. We used to pay $1,000 a month for this platform. You get it for $15. And you get it right from NASDAQ. So why would you not want to know where all the orders are? So instead of getting all these fancy tools and stuff, just go right to NASDAQ, pay the $15. And here you can see every single order, no matter what stock you're looking at,
It's amazing they do that. That used to be all hidden from the public, and only a NASDAQ market maker would have that.
Yeah.
Yeah. And
level the
now
playing
you
field,
get it
baby.
for free.
Yeah.
I mean, $15.
What's
Love
the
it.
difference between the bid and the ask on that stock? PACW, like what are they, like 5 cents between the bid and ask?
Well,
Let's
right
see
here,
here.
you can see it's like 2 cents right here. Here's the
That's
bid
good.
and ask.
That's a nice tight spread. I like those. I don't like the low price stocks with the wide spread. That's beautiful. That's
Well, it all comes down to
liquidity
volume.
right there. Yeah.
It's all about volume. I mean, the stock traded 2.2 million shares on the actual NASDAQ market, but overall, right here, we've been trading this stock. I had a PACW, one of those bank stocks from California that all got affected by it. Had a good move this morning, ran from like 7 to about 780, but
Nice.
trade 18 million. Because remember, the NASDAQ is just one exchange. There are multiple exchanges. New York, you could see them right here on level 2. There's EDGX, there's Archipelago, right here. You can see there's all different exchanges. But just on NASDAQ, you can't see all those. What's great about this is that you can't see all what's happening actually at that exchange. But if you get the actual book viewer, now you could see, like, I'll even highlight it for you. I don't want to take too much time, but what is it? You could see, what is it? NASDAQ is XNS. Just highlight it. See NASDAQ's highlighted right there?
Yeah.
Mhm.
And if you look at, but you can't see who's buying it at 11.55, 11.54, 11.52. You can't see any of those orders. But when you click here, now you can see all the orders out there. So that's why level 2, some people they don't really use it that much. It's been outdated since the late 90s,
Yeah.
but you need this book to kind of help. It's a good start, basically, for everyone.
Well, we got to have you back on, Fausto, so you can go into more detail with this. So we're looking forward to that. I think maybe next week too, you're coming, but yeah. And just to clarify that the data fees are included with that $15 a month, right?
Yeah. The only time that it gets expensive for somebody, as long as you're not a professional, meaning you're a stockbroker or you're an analyst, then it'll cost you $85. But no one here that's listening in is not a professional. I mean, we look at it as professionals, but we're not like trading someone else's money. So that's where people get confused. They're like, well, he wants to charge me next month, but it's really not the case.
Excellent. Great. Well, thank you, Fausto. Thanks so much for sharing all that. Appreciate it. All right, let's keep moving. Jack, while you're speaking there, tell us a little bit more about this disconnect between the Dow and the NASDAQ. What do you think?
All right. If I could share my screen.
Mm-hmm.
I'll try to find it. Can everybody see my trend point screen?
Yes, sir.
I see it. Mm-hmm.
All right. No, I got this thing is in the way. All right. So this is what I look at. I like to use a market-driven approach all the time. So the first things I look at are these 3 ETFs I'm going to show you. The first one is DIA, and this is in a 6-month chart. And, that's yesterday's bar, a higher daily high and a higher daily low, but it's still, to me, real bearish outside of that 1 day's bar. So this is just kind of a choppy sideways market. These are my trend points. If the stock is below all three trend points, it's bearish. If it's above it, it's bullish. This was been kind of stuck in the middle. So I'm looking at that. And then you look at SPY, and that's bullish, right? The Dow isn't. This is so weird that the Dow wouldn't be doing at least as the same as the SPY. So this is much more bullish, right? So I'm leaning more bullish right now with my strategies. And then to top it off, I look at QQQ. That's the tech market. And look at that. That is the most bullish of the three. And what's ironic is, I think it was back in 21, I noticed that NASDAQ was not the lead index, which it normally is in normal times, but for over a year, it wasn't. And it's kind of broken through now. And what I like to also back this up with is I look at new highs, and there's a lot more new lows than there are new highs, even though this looks like a bullish market. That's kind of the trap of it, is that, you can see right here, the number of stocks on the uptrend. You got Apple, bots, you can pull up any of these on here. And then when you look at the downtrending stocks, I also see where we have some like industries. Amgen hit a new low. AbbVie hit a new low. So I'm looking at that too. But right now I'm seeing a bullish market that doesn't have like a lot of fire underneath it. It could be extinguished at any time. It doesn't have a lot of burning hot logs. So it's kind of a fragile bullish situation. But the big disconnect I see is NASDAQ is totally broken away from QQQ and SPY. Here it is just again. This is like the most bullish it's been in a long time. Back from March right there, busted higher. So that's what I'm seeing.
Yeah. Hey, Geof Smith, all month I've just been thinking about being in the classroom with you and about the divergence between all of those markets. What do you think about what Jack's sharing there?
Well, it's kind of funny. In class, I used to like buy the NASDAQ and short the Dow or vice versa. And that's been working actually very, very well lately. I mean, you can buy the NASDAQ at the open, short the Dow at the open, and make money both ways. It's crazy.
Yeah.
I mean,
it's
crazy.
Crazy.
Just nuts.
Very, very strange things going on out there when you got just a handful of stocks driving an index higher. That's not a healthy sign at all.
No.
So, Jack, do you find yourself on a daily or weekly basis kind of having your short candidates and your long candidates, things that you're thinking of shorting, things that you're thinking of going long?
Yeah, mostly I set these up for an options play, whether it's a naked put on Apple, which is fantastic. You're not going to get this stock put to you. And those are really high yield trades. And then a lot of credit spreads on, for example, NVIDIA, AVGO, and even CMG. CMG has been a real surprise on a lot of different levels. They're in the same business as McDonald's and Burger King, but they cater to an entirely different customer. And just seeing how they're able to raise prices, that's an amazing success story. CMG really is in this economy. But that's how I look at it. I'll use stocks that are in trends. I'll go back to the same stock week after week after week, unless the trend is broken. So every Tuesday, I put on that credit spread trade for Friday's expiration. I already know a short list of stocks I'm going to use. Excellent. And then stuff that's in a real strong downtrend. We find these all the time, and they just are falling apart. So
you mentioned something too, like when the trend kind of ends, like you'll just trade something long, until the trend kind of ends. What signifies to you an end of the trend?
What signifies to me the end of a trend? We'll take a look at Apple. The end of a trend would be where it breaks down and then is below one or two of these trend points. But as long as it stays above this short-term trend point that's in green and continues moving higher, I'll stay with it. But when this trend breaks down like it did back here, I'm out.
Okay. So you just kind of take bite after bite of the apple, bite after bite after bite after bite until Apple would end its trend based on what you're viewing there. So
I'm long Apple stock too. And with Apple, I love to sell covered calls on this. This is just like a covered call trader's dream come true. So, you know, you can go in here now, sell a 190 call, 187 strike price call. If you get called out, you make a few couple shekels and you get to keep that premium. So this is beautiful for that. You know, I like using a little bit of the stock. Like I say, I'm long Apple, and then I'm always selling every month, selling covered calls against it. I'm long Nvidia, I'm long Google. Yeah.
Great. Good. Yeah, good stuff. I got long Google with you, Jack, a while back. I remember you were talking about that. That's been a fantastic.
Yeah, I'm going to get called out of that. You know, I sold the 115 strike price calls and it's at 125, but we lowered our cost basis on that by selling a covered call every month on Google. We got our cost down to 108. So if I get called out at 115, I'm fine with that. That's a nice little sandwich right there, you know.
Well, speaking of sandwiches, we keep talking about food here. Thanks, Jack, for sharing all of that. I appreciate it. I've been talking about sauce and apples and all kinds of things. Let's hear from you, Roger. AI into the restaurants. Let's keep this.
See, I knew today food was gonna be a topic. I'm gonna combine AI with food. You know,
Exactly.
what's better than that? So
Hey.
let me first talk a little bit about technicals, because I want to kind of piggyback based on what some stuff that Jack talked about and kind of put a little more context into some of those things.
Please do. Yes.
So let me show you guys something interesting. Now, this right here, not the bond market, that's not that interesting today. What I wanted to show you was the XLK sector, first of all. Not the XLK, XLY, sorry. Let me go to XLY real quick. Well, this XLK as well. Notice it's making new highs right here, right?
Mm-hmm.
Now, if you look at momentum levels right now on Infotech, you will see here, let me just make it a clearer view. They're so overdone that the level of stocks make the stocks in the XLK ETF are going higher. They're at the highest level right now. But momentum levels, meaning how many stocks are above the 20-day moving average, can't even muster the previous swing high. So divergence is so bad that even the number of stocks, there's like 40 to 60 stocks in there. The number of stocks making a 20-day high can't even muster the numbers. So that means there's a lot less stocks that are causing that momentum. Now, don't keep that thought in mind. Right now, we're looking at XLY. Now, XLY looks fantastic when you look at it on a chart. Looks fantastic. Look at this. Look at this. I mean, it couldn't look better, right? Here's the problem with this. If you look at momentum levels, you'll see that consumer discretionary has less than 50% of stocks below the 50-day moving average and the 20-day moving average. So you're asking yourself, Roger, that looks like it should be a lot lower. Why is it all the way up there? Well, let me show you why. 26% of consumer discretionary sector happens to be this one stock right here.
Amazon.
26%.
Amazing.
So when we're talking about a few stocks driving the market, we're literally talking about 6 stocks: Google, Apple, Meta, Nvidia, Amazon, and maybe one more I'm forgetting about.
ABGO.
Possibly. But the point is, this is what Amazon looks like, and this is what XLY looks like. But if you strip away the market cap, let me show you where if you strip away Amazon, this is where it should be right now, right here, a flat line, Moreover, if you think the QQQ looks amazingly bullish right now, I want to show you this is the equal weighted QQQ. This is the QQQ when you strip away all the market cap from the big stocks. Doesn't look bad, but it doesn't look anything like the big QQQ. Here's where we're at right now. Does that look like to you like a raging bull market?
No, wait a second. You say you strip away the market cap. Are you like saying you're going to go like the Dow index and just go price weighted?
This is an equal weighted QQQ.
It's equal weighted.
Yeah, it's equal weighted.
Equal weighted. Okay.
Yeah, so all stocks, and basically we're taking those 5 stocks and we're taking the capital away from them and we're spreading it amongst all the others.
Okay.
So this is what the equal weighted QQQ looks like, and this is what the QQQ looks like.
That equal weight is a much better representation.
Yeah,
I would think so.
That's a false look.
And this is what the QQQ is looking like. So those 6 stocks are giving people the impression that the market is doing, it's moving parabolic, but it's not. It's those 6 stocks. Now, they can huff and puff, but they're not going to blow the house down. It doesn't work that way. The rest of the stocks have to participate.
That's right.
Now, the other thing that happened is a lot of the market capitalization from sectors like healthcare, for example, they've been sucked out and put, cyclical sectors. They've been sucked out and they've been going into technology. I mean, look at the selling pressure this thing saw. Everything that this took under the chin went into those 6 stocks. How about utilities? Same thing with utilities. So right now, what I'm seeing is I'm seeing a lot of sectors really bottoming out. Like, for example, take a look at utilities. This is a good 20-day moving average is a good swing trading momentum indicator. And this has to be equal weighted because it just looks at how many are above or below the moving average. So forget about these squiggly lines here. Let me get rid of them. But you look at where we're at. I mean, that's utilities. How about healthcare? Look at healthcare. Actually, I'm sorry, energies. Look at energies. Healthcare is already coming up. I'll talk about oil in a minute as well. This is the energy sector starting to come up again. So the point is, there's a lot of sectors right now that are really misaligned because of what we're seeing in the technology, like consumer staples. Consumer staples, we are still in an inflationary environment. Powell lied to us when he said we're pausing.
What?
He made it.
Wait, what? Powell lied?
Yeah.
Newsflash.
Oh my God.
Heard
Yeah.
it here first.
Yeah. I know it's a shock, but look at where momentum went till yesterday on the consumer staples. So there's a lot of sectors that are really overdone right now to the downside, and there's a lot of sectors, as I mentioned, that are really overdone to the upside. And as Jack says, don't fall for the banana in the tailpipe. Don't let 6 stocks make you think that that technology stocks are doing all that great.
Amen, brother. I was waiting for you to use that reference, but
Yeah, don't fall for it. The momentum level can't even. I mean, I've never seen divergence in momentum levels. That's really out there. That's just really telling you that there's something really wrong there.
Yes.
So I think what we're going to see in the next 30 to 45 days, maybe less. I don't know, because when we're talking about a reversal, it's a much quicker than to the upside. But I think what we're going to end up seeing is a reversal. We're going to see a cool off in these tech and chip stocks, and we're going to see more market cap go into bread and butter sectors like healthcare, utilities, the stocks that I've been talking about, consumer staples. I think that's only normal. Now, what did Powell lie about? I'll tell you guys, this is really insulting. I mean, he's an insulting guy. He pees on our leg and keeps telling us it's raining. I mean, literally every chance he gets. So I read the minutes came out last week, actually earlier this week, or the weeks just run into each other for me, but I think it was end of last week. And the minutes really focused on them saying, we're going to keep raising rates. And if we are going to not do anything this time, it's only going to be because we want to wait and see. That's not what he said to us. So you have to wait till the minutes, which came out 3.5 weeks later. But what he said to us and what the minutes said were completely different. He made it sound like we're pausing because things are getting better. But what they said was, we're pausing because we want to see how bad things are. Okay. So there's a big difference. And then the rest of the Fed for the last 2 weeks, I don't know, I follow them daily. I follow what they say every morning in my video. They're saying, hey, we're probably going to raise, and if we're not, we're just going to wait and see and then add it up later on. The year still has 6 months to go. I mean, the party's not over yet. So don't think we're going to see a major turnaround in anything yet. And I know that tech got a little happy because of what Powell's been saying, and because of the news and the earnings on NVIDIA and a couple of these stocks. They just got into this momentum factor. But as my assistant says, it's a news-driven market with tech right now. You can't fall for this. Don't fall for this. So that's the first thing I wanted to say. So I think we're going to see a cool off, a lot of choppiness, a lot of mildness, especially in tech stocks. My suggestion for you folks, the best advice I can give you, when you see a sector run away, instead of chasing it, find the weakest stock like Qualcomm. Qualcomm is a very weak stock right now. Qualcomm is a stock that's been taking it under the chin while the rest of these stocks have been moving higher. So my suggestion, the way I would play this is instead of chasing the best stock and hoping you're not the last buyer, I would instead fade the weakest stock and buy puts on this stock or sell calls on this stock, sell calls or buy puts, because the odds are as they go down, the weakest stocks are going to take it under the chin first. That's just how it always works. And Qualcomm happens to be one of the weakest ones. There's a few other ones. There's a couple of semiconductor stocks, but this is definitely one of those stocks. So don't go chasing stocks after a huge run up. Find the weakest one that barely participated or just barely was able to get it up, and then short it or do the opposite on the way down. That's how I would deal with things on that end there.
Right.
Now, second thing I wanted to talk about. So food. Everybody's got food on their mind today, you know? So
It's Friday.
Friday. Yeah, it's Friday. So I want to read something to you. Now, I know that technology is moving at a very fast pace, but I want you guys here to be honest with me. I know everyone here flies and, you know, takes airplanes. I know Celeste goes from Indiana to Jackson, this and that. What do you guys think about those machines at the airport where you sit down, there's nobody there to take your order, you got to take the iPad and kind of fit? Are you into all that? Or I just walk past that. I can't tolerate it personally. What do you guys think of that?
I don't like it.
You don't like it either. What about you? What about you, Fausto?
Pass it.
Okay. All right. So everybody's on my, okay. All right. Okay. So we're all on the same page, but I got some bad news for you guys. It's not going anywhere.
Yep.
Let me read this to you. This thing is moving, drive-throughs are never, ever going to be the same again. So artificial intelligence will be taking more orders at fast food drive-throughs as technology takes off. Jack in the Box, Del Taco, they're one chain. They're big on the west side of the country. I don't know if you guys are familiar with Del Taco, but we got a lot of them in California. Also, Carl's Jr., which is Hardee's here. We have tons of them over there too. They're expanding into voice AI deployment for drive-throughs nationwide. So you're going to see a robot with a wig, at a drive-through taking your order. Wendy's is getting in on it. They're partnering with the Google Cloud, and McDonald's is finally getting in on it. So what's the company that's putting all this together? Well, here's the company that's driving all this. It's called Presto Automation, and it's not an expensive stock. And I know they've been talking about it on CNBC quite a bit, but this program is an enterprise-grade AI solution for the nation's biggest hospitality chains. And they have industry-leading automation, voice AI technology, reduces labor costs, increases revenue, and we're going to be seeing a lot more of this machine. So now I'm not a small cap guy. Everyone knows that. I'm not into that at all. But if you guys are looking for a small cap idea to invest in, this may not be the worst idea in the world. Again, this would be like buy 100 shares for $300, put it away and forget about it for like 5 years and see where it goes. But my theory, my opinion is they're going to get bought out by a bigger player. I wouldn't be surprised. Companies like that who are onto something in the AI space, especially right now when it's really liquid and hot, and a lot of investment banks are looking in the AI space. That's like it was like crypto 3 years ago when everybody wanted the NFTs.
Yeah.
It's like the cannabis stocks. It's
right.
It's a phase. But getting
Right.
back to your thing, I'm glad you brought that up about the tablets and stuff like that with AI. You know whose fault that is? It's the labor department. That people realize, like, you know what? You don't have to worry about paying insurance. You don't got to worry about getting sued. You don't got to worry about people coming in late. You don't got to worry about. So, like, you know what? It kind of makes sense, and you have nobody complaining.
Yeah. It'll make a lot more sense when it can tell me what I want to order. I don't see the intelligence in it. It sounds like a megaphone to me. They got
I was
that
kind of
already.
hoping for that too.
Jack, soon they'll be able to do visual recognition, and they'll pull up your last 10 orders and tell you exactly what you want. That's
About time.
that's like 3 months away. That's like the next upgrade, man. If
see
you thought
my
of it,
truck
Dave already.
coming.
Yeah, it's scary. I'm not. See, here's the thing. If it worked the way it's going to work in 10 years, I'd be up for it. But we're like guinea pigs right now. And I feel like I feel like those self-checkout supermarkets where I'm like always stuck waiting for 15 minutes for somebody to come and help me check out the right way. And I'm like, what am I doing here? That's how I feel about this. Because, you know, one time my wife and I, we were late for a plane. We filled out that thing. We were waiting. And then we found out they never got our order. So it's like when it works, it's great, but I have a lot of reservations. The last thing I wanted to get into seasonality, but before I get into seasonality, I wanted to just quickly talk about another topic. One of the things I look at is I look for news to hit an industry, and I look to see. Usually, what happens is like a stock will get downgraded, earnings will come out, but I'm curious how it will echo throughout the industry, and I'm seeing some rattling here. Advanced Auto Parts came out with earnings last week, and the company did awful. I mean, they did really, really bad. I mean, like when I say really, really bad, I mean horrible. The stock went down, I think 35% in one day. It got
crushed.
It got crushed. Well, I missed out on it. My assistant didn't listen to me and shorted in enough time. I'm just kidding around, but we could when I miss a trade, it's always his fault. You know, when I get a trade, it's always my fault. You know how these things go. So, but anyhow, I'm nervous about O'Reilly, AutoZone, CarMax, and AutoNation, and I think those stocks are going to start meeting the same fate. I think what happened was these companies had a big run up due to the supply chain issues with COVID. And I think now that these supply chain issues are resolving themselves, the numbers that these companies have different type of supply chain issues. And I also think there's not as big of a demand for used cars, which is one of the reasons why Carvana is struggling now compared to how they were doing. So I think we're now seeing the opposite side of what we saw during COVID. And I'm very fearful that this is going to reflect in the earnings on Orly, AutoZone, CarMax, and other companies. So be very, 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 very careful on that. Now, before I let everybody go for the weekend, I just want to show you the seasonality for next week. Can you see my seasonality chart, guys?
Mm-hmm. Yep.
Okay, great. So this is the seasonality for next week. This is from next week start. So let's see, 3rd is Saturday, 5th through. So it's right here. It's kind of right here, and you could see that it's bad. Seasonality is not good most around. Now, I've been doing this now for about 2 months, and you know, honestly, it's been kind of mixed. It's been a mixed bag. This is the first week for next week that I'm seeing a very I just can't find anything bullish. So I've increased my short exposure. I'm trying to eliminate as much speculative. I still really like the bread and butter stocks, like the consumer staples, the healthcares, but I'm trying to lower my exposure and start increasing my short exposure. We've taken 3-4 short positions just the last few days. I know Celeste took a short position today in one of her programs, but I'm starting to see some downside coming into the market. I think the happiness from this debt ceiling fiasco is going to cool off. Their earnings are behind us. June typically is not the best month, so I think we may be doing some put calendar spreads, or we may just kind of cool off on the long side of the market for a few days. But I wanted you guys to have this so you could see exactly what's going on and what's happening.
Perfect,
that's all I've got today. Sorry it took so long, but I had a lot to say as usual.
Well, we were just eating while we were listening to you, so we were having a good time. Just kidding. No, but yeah, I love that seasonality when you bring that in. And yeah, you're right. That's kind of the way I was seeing this market playing out here a little bit here these first weeks of June. Well, let's keep our food topic going. Jeffrey Smith, what's going on with what's the beef? You know, where is it?
Where's the beef? I remember that.
Yeah.
Oh, we're old. We are old.
I think most people have kind of seen the price of beef in the grocery stores go a little higher. Even going over to grab a steak or a hamburger somewhere has gotten a whole lot more expensive. And because of that, you always get to thinking, there's always got to be a why somewhere. So I started kind of digging a lot of things up this past week, just trying to figure out how things were panning out along the meat industry. One thing I've talked about this many a time, but we still are having some drought problems over there in Kansas and Nebraska and Western Oklahoma right now, which is where a lot of the cattle that we're concentrate on, I'll put it that way, are coming out of. So, but on the other side of that, if there's droughts there, that means there's not enough pasture to feed the, the herds that are there. But you also get into a problem of, okay, now I've got to feed them, so I got to go get hay. Well, the problem is with that is the price of hay is real expensive. In fact, right now, the price of hay is, almost as high as it was back in like 2013, 14, whenever that drought was over in Texas. And it's gotten very, very expensive. We've seen the price of hay, per ton head up. And then you think, well, okay, so let's go throw them into a feedlot because I can't feed them on here. Well, now you got the price of corn that's up, right? And we've seen that over the, since 2020 or whatever it is everything's just kind of shot up. Now we've had some softening in prices. Don't get me wrong in corn. It's off of its highs, but we're still a whole lot more expensive. So you kind of start coupling all that up and you're thinking, okay, well, now what? I mean, you got to feed them something. So, and that's where we're really running into an issue. And one thing I've been kind of concentrating on is saying, okay, well, we still got to feed them at least corn or alfalfa or Timothy or something. And so I've started to kind of dig into that a little bit and coming to find out, well, if we're not going to be planting as much corn, that means we're not going to have as much seed, or if we're still going to have, it's just a snowball effect here. And that's where I think where we're really running to in the meat industry right now is trying to kind of balance that out, trying to figure out, hey, how much beef are we actually going to have? The biggest, another issue that we're having with our beef is that we export a lot of our beef. So there's kind of that drag there. But when you go to the corn side, you don't just use corn for feed, you use corn for our consumption, you use corn for ethanols. So what corn is going to be used for what? And they're going to have to try to figure that one out as well. Do we want to kind of decrease what's going into the ethanol to feed the cows, or the heck with the cows, we need the gas? I mean, there it is. And so I started going in and saying, okay, well, then if that's the case, we ought to see some decrease in production costs. Well, I mean, or just production itself. Well, yeah, I mean, you look at our beef production is down about 11% over last year. Okay, there's that one. You start looking at a slaughter count down, it's down 10%. Even the placements are down about 4% right now, which placements are going into feedlots. So when I saw that, it was a drop, but it wasn't as big as the other production numbers. And I got to thinking, well, they already took a lot of their cattle to the feedlots last year because they already had the droughts. Now, do they have them this year? Well, you're putting lower weights into the feedlots. Well, usually when you're putting in a 600, 800 pound cow into the feedlot, it doesn't take long for them to get up to slaughter weight. Well, now you're putting in 400, 500 pound cattle in there. It's going to take them 3 or 4 months to get to slaughter weight, as opposed to 1 or 2 months into slaughter weight. And now the feedlots are getting overly full. So even though we've had placements down, they're still full enough from the smaller cows getting into bigger cows for the slaughter. It's just getting into a mess. Basically, if you just do the overall look at things here, beef prices are moving higher, and so are pork prices, and more than likely we're just going to be seeing those prices move up over the next 3 months. So if you're looking for a bullish market, just go look at cows and you'll be fine. There it is. Another thing is, if you start going over into go back to corn here real quickly, the price for rent of a farm is at a huge high as well. Right now it's going for, in Iowa, going for around $280 an acre. And people think, well, $280 an acre is pretty big little size, right? Well, you think about that. Corn, you can usually get somewhere around about 72, 175, 180 bushels of corn per acre out of corn. And I'll save you all the math. You can make about $475 an acre. How's that?
Yeah.
So if you're thinking $475 an acre, let's kind of jump it up. Let's go 100 acres here. You got $27,000, $28,000 in cost to rent the land, and you're going to make $47,000 gross. That's gross. So now I'm only making 20 grand off the thing. And then I got to put all the inputs into it, and I got to use all the equipment and whatever else is going from there. So who wants to make $10,000, over on 100 acres? You put a section out there, okay, there's 640 acres. So when you look at that section, if you're having to lease that, well, you're spending 180 grand to lease it. That's a lot of money, especially if you're only going to make 280 grand when you're going to farm the thing. And that's gross. So the rents are really, really, really high, which might deter a lot of those farmers out there from even renting anything. I would rather own the land and get all that money myself as opposed to try to lease it out. Now, of course, the leaseor is going to make money off of it regardless if they don't want to do any farming, but the leasee is not going to make very much. So there's going to be probably a decrease in the number of leases going out there for all those crops. That's my point. Which again gets into decrease of number of crops that are out there, which is decrease of food and decrease of food for cat and all that stuff. So, I mean, this isn't just a real quick, and this is what I'm getting at. It's not a real quick question of why is cattle going up? You got to kind of look at everything here. And, I probably would have looked at a lot of other things, but I got kind of short notice on this thing. And so I thought, well, this is what I've been doing this week. This is kind of what I do. I kind of pick something and say, why is this going down? Why is this going up? And I start digging into it all. And so when you start looking at all of those, my guess is like the ConAgras are going to be going down. You're probably going to have weaker ConAgra. There's not going to be as many inputs as they're going to be wanting to do. The seeds aren't probably going to be there. They're not going to have that many seeds. So my guess, the ConAgras will be moving down. You'll probably see, the ET and cow continue to move higher. So, I'm more of a futures trader. I've been trading, this is a live cattle chart. Yeah, it is. Okay. Make sure I have that right. So this is a daily chart of live cattle. And you'll notice over here on the left side, this kind of ranks things by percent moves from open. And this is going to be based off your month open right now. But you'll notice at the very, very top of this list, you have lean hogs, live cattle, and feeder cattle. There, the meats are going up, right? So, that's just telling you right there. I've been kind of seeing these things pegging here. And you'll notice here on a daily chart, cattle's gone from $1.53 a pound or 153 on the hundredweight, up here to $1.72. And that's just literally over the past month and a half, 2 months. So you've had a huge increase just in the price of beef just in the past month and a half. People are going to be trying to figure out, why isn't that steak so expensive? I was getting that for $7 a pound. Now it's $19 a pound. Well, yeah, that's just what it's going to be. And you're seeing this a lot. I've been buying, literally $4 wide spreads on live cattle, and picking up 50% on the spread and just getting out and just going out and grabbing another spread. And then I thought, well, why not try to, get 100% on the thing? So I've been trying to get them in at about $1.30, get out around $2.60, $2.65. And that's been working real well. And the options work the same in futures as it does in equities. The problem that you run into is it's the price per point that's different. You're actually controlling 40,000 pounds in the live cattle of live cattle. And if you get delivered, you can go to Kansas City and pick them up if you want to. I don't think you really want to do that, but anyway, lean hogs is actually not a commodity. It's actually just a financially settled contract. So you're not going to get any pigs if you're wanting to trade lean hogs. They've been really kind of stuck though. They can't get above 85 cents and they really won't get below about 79 cents a pound. So I wouldn't be touching lean hogs so much right now, but your feeders have corrected back, but they've been in a really strong move up as well. But I think your live cattle is probably the one that you're going to be wanting to kind of look at this point in time, because they're starting to really focus on what's out in the pasture, not necessarily what's at the feedlot. And if they're starting to see, the droughts really come in and the pastures can't get, rain to feed the cattle, then it's going to either, going to be deteriorating the herd that much more. And I think that's why you're seeing lives going up, just because they're going to want to sell them to some place that can raise them. And I think the price of those are starting to head higher on there as well.
Interesting.
So,
Good to
But-
know. Well, Jeff, you mentioned a couple interesting things. You mentioned, we're talking about the commodities, you talk about you trading the futures, you talked about options and equities, because I know from being around you a long time, you use this knowledge to not only trade the futures and the commodities, but you use this knowledge to trade the equities too. And you particularly have a real knack for trading some options. And I just happen to know that you've been doing pretty good on some options. And I wonder if you could share some of that with us.
Oh yeah. And I guess this is kind of more into Jack's camp. He's an option premium seller out the yang. So he just loves doing that, which is awesome. And so I like doing the same thing. I'm still in his camp. I'm more of just selling naked puts or selling naked calls, see if they can get it, give it to me. You can get more premium that way, but a lot of people can't do that. So I've got a service that it's a itty bitty little service. I'll put it that way. And it's something that I do once a month at the beginning of every month. And here, I think I've got something for that. Just real quickly. I know we got to do Ask the Pros premium here.
Yes. And while you're finding that too, we got Uncle Roger. You have an event coming up here at 1:30, right? Roger, tell us about that real quick.
Oh, let me tell you something. I'm going to be showing people how to use my mean indicator. It's a mean indicator. It's a perfect time. In today's VIP room, we showed people several trades. I actually looked at your short trade through the that indicator today, and it passed the mustard.
Did it
passed
look
the
okay?
mustard. It passed the mustard. It fit.
If it's got Uncle Roger stamped in it,
I'll be talking about it in 30 minutes. If anybody has the link, please post it. So Adam, do you have the link? I'm sure Adam has the link. He has links for everything.
We'll get him posted. Yeah, we're gonna get on, and we'll even post it in Ask the Pros Premium too. So
but thank you. I appreciate that. But it's happening at 1:30. It's going to be a great class. Can't wait to see everybody there. And it's all meat and potatoes, no fluff, no monkey business, none of that stuff. You get great education.
We can continue to eat. The feast continues.
Exactly.
Thanks for that plug.
Yeah, thanks. Okay, Jeff.
So, but before we go, this little program is called 12X Trader. Like I said, once a month at the beginning of every month, I start looking to make a trade. I'll put it that way. What we're looking to do in this program is I try to sell premium, whether it be call spreads, put spreads, it doesn't matter. And I usually will do a spread just to keep the margin required to hold the thing at a very, very small amount as opposed to a large amount on some of these stocks. So I will put in the email all the instructions, what we're selling to open, what we're buying to open, when to close out the position, what the risk is of the trade, and there it is. But it's a neat little program. We've out of 24 trades, I've lost 2. I apologize for that, but it's not so bad.
No,
I mean,
great.
there's always risk in trading and everything. And there's ways of managing these things that you can do, but this is just sell it, close your eyes, go on vacation, come back and see how you do. This is kind of how those results are. But I trade not only ETFs, but I trade stocks. It all just depends on what's out there and who's doing what where. I like the commodity side of things. So you'll see a lot of USOs and GLDs and things like that, but that's okay. It's just kind of what I watch. But it's a real neat way of just going out, selling premium. You choose, how many contracts you want to do. That's totally up to you. You can do it on a very, very small account or a large account, just so you can do some spreads. But you also I got a master class in our members area. This kind of goes through how I go to choose an option, why I choose what I'm doing, looking at strength and weaknesses, support and resistance. And I always try to sell options below support areas or sell above resistance areas, just to make sure that the market really can't get there. We'll also have other educational things, and this is what I want to get to because yours truly, Celeste, is in here. But
that's right.
Tom actually has 3 books. I don't know if you've read it. Winning the Day Trading Game, in my opinion, is the best of the 3. And the reason for that is you actually get to see how he actually became a trader. Really how trading is really his, ball of tea. And what was that guy's name? you guys might know it. Louis, is it
Oh.
Perino? Louis Barcelino? Louis
Oh,
Barcelino, maybe?
I know
Um,
what you're talking
He was a
about.
Something like
pit
that.
guy.
Yeah.
He actually had a book called From the Pit to the PC. It was really, really interesting. He was actually an S&P pit trader. And he actually had to leave that and go to just trading off the PC. And that book's kind of interesting just to see the battle. Of course, nowadays, everything's on the PC, right? Who cares? But man, back then it was really pretty cool. But that's the same thing Tom went through, is trying to trade that way and go into electronic trading, and what he had to start looking at to try to gain the upper edge. It's really, really a neat series of books if you want to kind of get into Tom. And of course, this is the one I was just talking about, Celeste here. There's a thing in our members area called Understandable Options, and it's a 15 video series on literally walking you through how not only what options are, but strategies behind options and how to trade those options. It's really, really a neat, I guess, series to help you understand how options actually work. And of course, the first Tuesday of every month. Now, I like to have a full week. If I have a partial week, I don't like trading during that week. So I always look for the first full week of the month. And then on that Tuesday, we'll look to sell that spread, and we'll be getting out on Friday because it's a weekly option. And if you want to do this, you can do it with me for $1 a month for 12 months for $12. So your first trade ought to pay for the whole $12, and then you can make money the rest of the year very easily.
That's crazy. That's
but,
a dollar.
I love it.
But
I wasn't sure that
what a
was
steal.
right. I mean,
Is that real? Folks, go to dtitrader.com/12x before Jeff figures out that he could be
made a
making more
mistake.
money on this deal. This is crazy, Jeff.
Yeah.
I got to get in on
misprint.
this.
It's a
It's a neat
misprint.
little thing, but I hope you all enjoyed it. You can also call 904-416-1776. And
Peter says
hold
it's
on.
too expensive.
Too expensive. Yes, I
Too
know.
expensive, huh?
So, hey, it's cheaper than lunch.
Oh
Think of it
yeah,
that
I mean,
way.
this is a deal. This is a deal, folks. Don't
Cheaper
even
than a
think.
hamburger.
Don't even think. Just do it. Just
Yeah.
do it before it's over. $12.
Yeah.
You could have charged $1,200 for this, and people would sign up. This is fantastic.
yeah,
Yeah.
Jeff's
VIP
the
is
man.
lifetime, Jim. That's lifetime.
Yeah.
Yeah, this is really great stuff. This is Adam says he's stole the babysitter's money. So, and that's not Adam now, right? That's great. Yeah.
But y'all join up. We'll have a lot of fun together. If you have any questions, of course, you can email support@DTI Trader or me also.
Yeah.
And we will help you out in any way we can. I know that Ask the Pros Premium is starting in less than 1 minute. So Celeste, you need to bug out, and I guess
I'm
we ought
bugging
to as well.
I'm going to head out, but thanks everybody. You all
Thanks,
can stay
everyone.
here. I'm going to head out there to Ask the Pros.
Thanks,
Premium.
everybody.
Good to see
Thanks,
you,
everybody.
Jeff, Fausto,
you all.
Jack,
See you guys.
Celeste.
Yeah.
Bye,
See you
guys.
next time.
Good to
Go
see you
get this
guys.
Hannah
Jill
Beaver
and go
next
see
week.
Uncle
Hope to see
Roger at
some of you.
1:30 as well.
Jeff, definitely. Let's get together, Jeff. Want to talk to you about gold, okay?
Awesome. Sounds good.
All right.
Alrighty. Thanks.